Hello friends, this is Martin from Secrets Channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market today and then how we can better plan for a good trade tomorrow. So if you're not subscribed, please subscribe and share it to your friends and colleagues. Thank you so much. Right. So markets did a bounce yesterday and today it faced resistance. Both indices faced resistance and paused. And tomorrow we have a truncated week expiry, and day after tomorrow we have a Fed meeting outcome that is coming on a somewhat trading time. So that's what we are. Let's look at what happened exactly. So as we do every day, we will do the pre-market analysis based on the all of these parameters on the charts. Left side, what you see. Then we would have additional open interest analysis and volatility analysis, and then institutional participation, sectorial performance, and commodities, and then we'll also wrap up with some actionables. So let's look at the charts. Left side you have Nifty, and the right side you have Bank Nifty. You can see a red candle, right? After an attempt to move up, you can see a green candle, and which is closed above the previous candle, which eventually comes from a bounce from a big fall, right? Same, a bounce from a support zone. So Nifty closed 40 points and closed that down after a failed attempt to move, right? And where did it face the resistance? At 18,000, and there is a good support earlier, but it's broken down. Now it is facing, it's coming out as resistance. Bank Nifty, contrary, is closed green with half a percent up, right? This also faced resistance at a big rounding number of 40k, which is a big support earlier, right? So that's exactly what happened. Bank Nifty is more, looking like more bullish at this time. Nifty seems to be facing resistance. Bank Nifty also faced resistance, but looks much better. Intraday Nifty, intraday 15 minutes action, if you see, it was trending down on the Nifty after the big attempt to take away the 18k. It was trending down, trending in the sense, creating swing lows and then going down. Bank Nifty, what has happened? It tried to gap up and failed, but it then did a good attempt upwards and then managed to move up a little bit, and then later on the afternoon it consolidated. This is what happened in intraday action indices. Now Nifty, Bollinger Bands, if you see, so Bollinger Bands, you can see that it has fallen off. Nifty has fallen off from the median band, that's a 20 moving average, and it is facing resistance exactly below that. So it needs to close above this in order to show that we are back in the bull zones. But look at Bank Nifty on the right side. It has actually taken a support from the Bollinger Bands, and today also it is comfortably closed above the Bollinger Bands. So that's clear bullishness, much more than the Nifty. Now another thing that you can notice, that the width of the band is not skewed, right? It is still having good width between the middle and the higher, the middle and the lower. That means the volatility contraction has not yet happened, but you can see that the upward move has halted and then it has turned flat here. Here also it has turned flat. So this indicates that there can be consolidation that can be expected between 17,600 and 18,600 for some period of time. It could be months together, like it happened from February to 2 months back. So like 6 months of consolidation happened. So similar thing can happen, is what the Bollinger Bands is indicating much ahead, right? So yeah, so intraday price action is what you see. It had moved up, failed, and it was trending down. Nifty, Bank Nifty 15 minutes chart is saying it is failed, but it attempted and then managed to break out of the resistance, but again faced another one at 40,000 and then consolidated. This is what happened. Now look at the support resistances. You can see that it is currently at a resistance which is 18,000, and if that is taken away, you have the 23% projection level at 18,350 and 450, that level, and after that it is all-time high of 18,600, 650, that levels, right? Downside, it has got a good support at 17 This one 17,850 is a good support, and after that, if that is 17,850 is the previous resistance. There is a previous swing low at 17,650 from where it bounced from. That is also support. If that breaks, that also breaks, we have 7450. That also breaks, we have 250, 7250. That also breaks, we have the big rounding numbers. So point if supports downside. Bank to right side, if you see, it is facing resistance 40,000 first. Then above that you have 41,000, which is also Fibonacci 23% extension. After that you have 42,000, and downside it has a good support at 38,800 and 39,000 from where it had bounced yesterday. And below that you have again another 38,400, which is also the place where it has actually bounced off the big fall. So that is all supports downside and supports upside. Bollinger Bands, we already seen that there is some kind of, there's no already contraction happening, but there is a consolidation that is being signaled by the bands stopping the upward move and turning sideways. Momentum, weekly momentum has got a bullish reverse divergence. We already saw that it is in action. That's already bots. That's on the Nifty. Right side Nifty, that's weekly candle, and this is daily. Daily you can see that the momentum has slipped to the sideways, and still it is still in the sideways. It is not moved back to the bullish zone. So you can see that it is below the RSI 60. It's below the RSI 60 in the sideways zone. So the momentum for both the indices, is yet to catch up, right? In the short term, but in the weekly and monthly time frames, it's bullish. We're talking about short term. Intraday analysis means the individual day analysis. What we're doing now. Look at the ADX trend, the trend indicators. Trend indicators are showing that the bearishness is there. Right now, the short term, it is bearish. DMI negative is dominating. DMI negative is dominating BANKNIFTY also. Right side. Now you can see that it has taken a bend. The ADX trend, the green one is the ADX trend of the trend has reduced, and now it is attempting to fall, to turn, take back. Whether this turn will fall down or whether it will halt the down move from here and then turn up, we don't know, right? But right now it is bearish. DMI positive. Some U-turn has taken here. Whether it sustain or not, don't know. BANKNIFTY, there is no question of going to. Trend has actually reversed with the bend and then continues falling down, and DMI also is negative. Now volatility, you see, today it is flat, hardly 1% of downfall is what happened. 17 level of VIX, India VIX is maintained. Implied volatility is 15.63, it's fallen. 34.27 is the IVP, that is also fallen. So IVP, if it moves up, it's better, right? The triangulated week may be the reason why that. Now look at the open interest data analysis. This is a bearish start of Nifty. Here also, you look at the high volume of resistance that you are seeing at 40,000. Look at the very high volume of resistance that you see at 70,900, and look the small volumes that you see in the. This is like hardly any contracts are there in the put side. It's all the it's the bearish starts. And the change in open interest today, you can see that heavy resistance call writing is added all across, right? Even at from 7,900 level onwards, it's all call writing, new addition is rapid change in open interest. But in BANKNIFTY relatively has unwinded some greens, some call has been unwinded, and then some support has come in. That means BANKNIFTY may not fall buy and it's more bullish. That is the same thing that is indicated in the put call ratio also. 8-2 is more bullish than 7-7, which is the put call ratio. And also the short covering that is what happened in the futures, right? Short covering is bullish, and long unwinding is what happened in the Nifty. So Nifty levels is 70,500 and 70,700, both have good put trading, and 18,000 is a huge resistance, and 8,200 also huge resistance, which are never going to get taken away. Both of this most likely tomorrow. 39,500 and 38,000 is 1,500 points difference. This is 200 points difference on Nifty. Here it is big difference between. So 39,500 is hold or not, question. 40,000 was huge writing. Whether that will be taken away is some question there as well. Answer tomorrow already. So that is what the open interest analysis shows. Sectoral performance, if we see, IT sector closed at 0.30% down. It's facing kind of resistance to the moving average. On the sideways, stay away till it catches up. Metal 1.5% down, and lost momentum in the short term. Wait. Autos, that is only stock will perform today. And reality. Auto gapped up today 1% and closed indecisive rate, right? But it was a gap up, that means bulls, and it regained lost short-term momentum also has picked up. So you could pick it up, but ADX crossover is yet to happen. So ADX crossover also happened, then you can see that auto is going to be bullish back again. But right now, technically, it is turned bullish today. But there is indecisiveness. There can be consolidation. It can happen, right? So Pharma again closed at 0.5% down in short-term momentum lost away. FMCG facing resistance of the momentum. It's bearish zones momentum, not even sideways. So you just try to wait for that to catch up. Reality bounced up close green 3.5% and regained the momentum also. So reality is bullish, auto is bullish, right? Rest of sectors aside, we'll have to wait. Institutional participation data is not coming, right? We had huge institutional selling that was happening in the last weeks. Yesterday it was very less. Little buying has happened for the day also yesterday, but overall there is institutional selling that has happened. We'll just quickly check whether the data is coming or not. No, not yet. Let's get back and see the charts. Now, this is very crucial. Dollar, right side dollar index is trying to take away the resistance, but today it has weakened dollar. So you can see that the currency pair USD INR has strengthened and has fallen below the 75 levels and fallen back to the channel, right? So which is indicating that the dollar, that may be the Fed demand thing that may be playing out, but yeah, B has gained something today. Crude oil 83 plus and crazy level, but this is small body, but it is at multi-year high level, and this is really bad for our economy, right? So that is something of concern. And gold, look at that, it is attempting multiple times to break out of this, right? It all depends on whether the dollar is going to weaken or not. The moment dollar weakens, this can break out and then go up to meet the break out of this channel basically, but the channel top where it is hovering around for the last 4 hours. Either it will sustain to be at this resistance, be at this support zones, or it will break out and hit the next resistance. So that's going to happen in the coming weeks. Now US markets are not showing any clue at this time. No big moves are seen anywhere in the US or the UK market, more or less. We can't make any judgment on the Dow Jones or Nasdaq or the S&P 500 at this point in time. You have to check at the pre-market whether how it performed during the previous day and then take a call on it. Actionables, Canara Bank, huge volumes, great momentum in short term and all time frames, and also mega trend. So this has been beaten down since so many years now, and it is showing that if you look at the monthly candle for this is a rounding pattern breakout, and the monthly candle you can see that there is some kind of reversal that is happening slowly. So big volumes indicate that big buying is happening. So that is something that you can look at positional and swing, not intraday. TVS models also showing multiple cups, multiple inverted head and shoulder patterns are there, and rounding pattern has broken out, and so this is weekly channel. Both of these are weekly candles. So look at the daily candles for the entry, and it has to be for the swing entries, not and not for intraday trades. This both looks good, swing and positional trades. Now just to wrap up, my view on very short term, right, for tomorrow is bearish, mildly bearish, not very bearish, mildly bearish, mildly, and bearish to neutral, not exactly bearish also. So it's kind of neutral or mild bearishness is what mine. It's the same view that I had. Why? Because institutional selling heavy, concern, bearish. Fed tapering meeting outcome going to come, uncertainty, bearish. Expiry day volatility, uncertainty. Open interest data is not having very low volumes, truncated week, and not giving a clear signal on what you have such wide range of 17. Even on the last day also having good put rating at 17,500 and heavy resistance in at 18,000. So all little confusing and little bearish again. Charts, yeah. Now why it is mildly bearish and neutral is because the charts are showing that so that is again a reason for the bearishness. The chart is showing that there is a momentum that is resisting and it has not gone back to the bullish ones yet, You need to just wait for tomorrow also that it will happen or not. Otherwise, so there is reason the charts also tell that there is some resistance that is being faced. Truncated. So the last three are the reasons why I am only mildly bearish and neutral kind, because it's a festive mood and then markets may not crash. People are in good mood, buying can happen, and so at least it will consolidate. It's not less likely to crash on a festive season. So weekly bullish reverse movement divergence is already in action. We've seen the bounce happening, already faced resistance. The target for that is the previous all-time high. So that if it works out, it is going to be a good go back after the decent 5% correction that happened last week. Right? The bounce in the charts also indicating positive. So last 3 points are reasons why there is some element of bullishness that is there, neutral thing is there, but otherwise I have a bearish, mild bearish view. And the last 2 points is about the option sellers volatility. Volatility range you can see that 15 to 20. So it's not going down below 15. It's going to move between this 15 and 20 for a long period of time. You never know how long it is going, right? But yeah, so so that's a new volatility regime that has been there since almost 1 month. And the volatility spikes we have seen even today also. We had big spiky moves that is happening. So the way to play this is using option strategies, hedge positions like calendar spreads, vertical spreads, iron flies, and nine condors, and all of these strategies has to be applied to save yourself from the volatility hit, not taking away your money, right? So that's very important to risk define, to define your risk and then play the game, right? So I hope this gives you gives you at least some bit of help to form your own view and your own trading plan for tomorrow. If you like it, then consider hitting the like button and share it with your friends, colleagues. And thank you for your time. Thanks for watching, and happy trading and happy learning. Bye.